plenty of economic data to keep us interested coming up, with the UK mortgage applications numbers on Monday the 30th, the latest purchasing managers indices for manufacturing, construction and services industries in the UK, and Federal Reserve and Bank of England interest rate decisions on the 1st and 2nd of August for us all to chew over. Over here, Governor Mark Carney seems to be talking a tougher game again, but we have been here before, while his American counterpart Jay Powell is expected to leave US interest rates unchanged this time at 2%, ahead of 1 quarter point increases in each of September and December. The second quarter earnings season in America will still be full throttle, with 144 of the S&P 500 index's members scheduled to update its shareholders on their financial performance. Big names to watch include Caterpillar, Pfizer, AIG, Kraft Heinz, Cadbury and Mondelez, and also Apple. That one, of course, was boosted by April's announcement of a $100 billion share buyback and enhanced dividend payments, and the tech stock shares are trading at a new all-time high as a result. That's also helping all of those FANG stocks, Facebook, Apple, Amazon, Netflix and Google parent Alphabet, drive the US market ever higher given their enormous market caps. This chart here shows Apple on the left-hand scale and the FANG Plus index on the right since the launch of that index in 2014. We're also going to have a busy time in the UK, with 20 FTSE 100 firms due to release statements or indeed full results. They include British gas owner Centrica, Just Eat and house builder Taylor Wimpey on Tuesday the 31st of July, BAE Systems, Lloyds and retailer Next on the 1st of August, Barclays, software giant Sage and Rolls-Royce on the 2nd, and finally Royal Bank of Scotland and British Airways owner IAG on Friday the 3rd of August. But for all of the interest that those names will inevitably generate, the company perhaps for me most capable of causing a fuss in the week ahead could be oil major BP when it unveils its first half results on Tuesday the 31st of July. Helped by recovery in the oil price from early 2016's trough of barely $29 a barrel to the mid-70s now, as well as its own cost cutting, shares in BP are trading near 5-year highs as we can see here. Fears over a dividend cut, well, they seem to be a thing of the past, and even the OPEC deal in Vienna in late June to increase production has yet to really dent the oil price, at least in part due to falling output in Libya and Venezuela, as well as American efforts to slap fresh sanctions on Iran. This makes BP's latest financial report quite timely, and analysts will be looking towards several items. Now, when it comes to the second quarter figures, BP will steer everybody towards the replacement cost profit before tax figure. That excludes the change in value of inventory to try and smooth out some of the effects of movements in oil and gas prices. In the second quarter of 2017, BP made a headline replacement cost profit of $2.1 billion and an underlying one, excluding exceptional costs, of $2.2 billion. Note, however, that oil prices have surged since then, and in the first quarter of this year, BP made $4.4 billion in replacement cost profits and $4.7 billion on an underlying basis. We can see the progression going back to 2014 right here. The benefits of higher oil prices can be seen at the upstream business, exploration and production, while increases in crude do represent increased costs for downstream operations, refining and sales. Upstream replacement cost profits were just $795 million a year ago, while downstream came in at $1.6 billion. Now, beyond those headline numbers, keep an eye on the quarterly dividend, expected to come in unchanged at 10 US cents a share, and any comments on net debt and cash flow. BP has launched a share buyback program to cover any dilution caused by issuing scrip or stock as a dividend payment, and there have been suggestions in some corners the firm may even look to increase its dividend at some stage in the future. Capital investment last year, well, that was $16.5 billion, and BP's guided to between 15 and 16 billion for this calendar year, while net debt ended last year at $37.6 billion and rose to nearly 40 billion in the first quarter, so it would be quite nice to see that start to come down again. Thank you for watching, and I look forward to seeing you next time.